Hey, what's going on, everybody? So, I want to come on here, help you guys if you are looking for business financing or any type of financing, but this particularly helps with business financing. Here's five critical mistakes that a lot of people make and how to avoid them. All right. First off, you'd never want to apply for anything blind, right? So, this might sound very basic, but the first thing you need to do is know where your credit is. All right. I see a lot of people apply for financing and not have a basic understanding of where their credit is. Now, what do I mean by know where your credit is? Understand where your FICO score is, okay? The easiest way to do that is Credit Karma is usually wrong, but you can monitor your credit and it'll give you a range. When you're looking for financing, it basically is 720 and above is can or should be able to get approved for any type of program. 650 to 680 or 700 is another tier. 650 to 600 is another tier, and then anything from 500 and below is very challenging. 500 to 600 is another bucket. All right, and that will match up, and it will dictate what programs and what rate you get. The next thing is business credit. Do you know where your business credit is, and if it's relevant or applicable to what you're applying for? All right. The easiest way to do that, go on Dun and Bradstreet. You put a quick Google search and make sure you're on top of that. Understand where your business credit is too, because when you're applying for an SBA loan or you're applying for equipment financing, that comes into it. Okay. That all comes into play. All right. Next, you need to know how much you need. So don't apply for financing and just leave it open to interpretation. All right. Understand you want to have a set amount that you're looking for, and more importantly, what what are you using those funds for? I'll give you an example. A lot of people have been applying for SBA loans. Okay, we've been working on at any given point 250 plus at any given point over the last, call it, 4 or 5 months. You want to know where that money is going and what it's allocated for, and by you understanding what you're using the money for, you have a better shot at getting into the right program. For example, if you're trying to buy equipment, that's a different program than getting an SBA loan unless it's a massive piece of equipment. Okay. If you are looking for short term things like inventory, supplies, marketing, adding people to your staff, things like that, that would be better for a line of credit. So you want to know how much you need and you want to give a breakdown of where each dollar is going towards. Okay. Next, understand what challenge you're trying to solve. It's not just how much and what it's going towards. What is the basic challenge that you are trying to solve? For example, if you are a business to business company or you work for the government, right, and you are paid net 15, net 30, you are having trouble growing. That's what you have to communicate. A lot of people in that situation are actually looking for a line of credit. And the problem with a line of credit in that situation is you're always going to outgrow that line of credit as the company grows. The problem is mechanical, meaning you're doing a job, you're laying out money for labor, for supplies, for inventory, whatever it is, and then you're waiting 15 to 30 days to get paid. Whereas if you use invoice factoring, you get paid the next day, that solves that issue, and then you can still get a line of credit. So understand what you're trying to accomplish or what you're trying to solve, because that will help whoever you're working with get you into the right program if they know what they're doing. Okay. Next, have everything ready. All right. A lot of times people get caught up and they go online and they search multiple different places and they don't have their documents ready. What are basic documents? Simple. Proof that you own the business, 6 months of bank statements, your payment processing statements, tax returns, and if you're going for anything substantial like equipment financing over 200,000, an SBA loan, you want to have financials. Financials are a profit and loss with a balance sheet. If you run QuickBooks or any type of accounting software, you should, and it's up to date, you should be able to go in, look at your financials at any point. Those are very important when you're talking about applying for larger amounts of money. Okay, make sure you have those ready and available. And then a debt schedule, it's always good to have because you want to know exactly how much you owe, what the payment is, what the interest rate is, and what the remaining balance left on it is. Okay, by having everything ready, okay, it's a much quicker process. All right, and then where do you go? I mean, obviously, I'd love to work with you if you need help, but understand the difference between going to a bank, going to a broker, going to a marketplace. When you go to a bank, I'll give you an example. I went to a local bank here, Truist. They didn't really have a business. They probably had a business loan option, but they didn't really utilize it. Okay, so that means they didn't have anything for a line of credit. They didn't have anything for equipment financing. They definitely didn't have anything for invoice factoring. Okay, so if you don't know where you're going or what that bank specializes in, it's going to be more challenging. Some banks will write SBA loans. Okay, basically they'll do an SBA loan based on SBA guidelines. Other banks won't. All right, some banks love to issue business lines of credit, others don't. Okay, if you're going to a bank, you need to know what they specialize in. Most banks do not have a wide variety of programs for business owners. All right, that's why I love doing what I'm doing because it's very easy for me. Brokers will charge fees, okay, or they can charge fees, and you don't know what programs they ultimately specialize in. All right, and then if you go to like an online search and type in business loan or line of credit, a lot of people are going to pop up. Sometimes those are lead aggregators. Okay, so all that means is your information is being consistently resold, and now you're getting all these phone calls. All right, so when you have a trusted source or trusted advisor to go to, it makes your life easier. If you ever need help, please reach out. All right, but these are 5 critical mistakes that I see a lot of people making. So I just want to recap it. 1, know your credit, both business and personal. To do that, use either Credit Karma for personal or any monitoring service that's with your credit cards, and look up your DMB, your business credit score using Dun & Bradstreet. Okay, know how much you need and what the money's going towards. Understand what that means for your business is the third one. Okay, what problem are you trying to solve specifically? Have all your documents ready, and then know where to go. All right, I hope this helps you. I hope this helps you avoid some mistakes. If I could do anything for you, please reach out. See you on the next one.